Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 14th COT report in 2014. And as usual, we're going to start off with the changes in commercials positions. So here we go. Russell 2000 on top of our list, followed by Nasdaq and Dow Jones. And S&P 400 below the dollar index, and of course the Mexican peso, as you can see over here. So pretty large changes in indexes in this latest report. Of course, you may see on this chart, we do have larger changes in the past. This, of course, is a bullish COT change signal, possibly pushing prices higher in the near future. Opening a 5-year chart, let's have a look at the COT Extreme. Here we go. You can see that we're moving away from this bearish extreme level over here. We're not at a very large bullish COT extreme level yet, of course. Actually, here we had this bullish extreme coming a bit early, and you may see we had a decline in prices, and then the rally basically started. So, of course, it may be that this bearish extreme is affecting prices right now. I'm not sure. I can't tell you. Of course, the big question is, are we going to be seeing declining prices the next week as well? Similar price decline as we had last week. Then we may consider this the end of the rally, possibly. Just to have a look at Nasdaq, let's open the chart. We have an all-time COT Extreme and small speculators. That's interesting. Let's open the 5-year chart. There was a huge change in their position. You may see here 36% change. They've never been so optimistic about the market. That in itself, of course, sounds pretty bearish to me. So even if we've moved away from this extreme level, but of course you can see the correlation between this extreme and the top over here. So this may actually mean that the extreme in Nasdaq is affecting prices. Of course, you may see a few examples over here on the chart, some pullbacks during the rally. So, of course, be careful. We cannot say 100% that this was the top and the rally is over. But one thing's for sure, on the Nasdaq chart over here, the COT report definitely tells us that we've been more closer to the bearish extreme side for quite some time now. So if prices start declining, that would be absolutely logical if we followed the COT report. Let's jump over Dow Jones because, of course, these markets pretty much correlate with each other. Just to see something else, a currency. Opening Mexican peso. Because of the 18% change in commercials positions, pretty large change. We do have some greater changes in the past, though. And if you look at the chart over here, they're not that bad signals at all. So pretty decent, good COT change signals. Of course, bearish type signal currently. But opening a 5-year chart, we can have a look at the extreme, whether we've got one or not. A few reports ago, we had this bullish COT extreme signal. You may see prices rising afterwards. So there's no surprise in that. There isn't any real COT extreme situation at the moment. We would get a very large bearish extreme, of course, if we'd reach such levels in case of commercials below 150,000 contracts net short. We're not there yet, so there's still some space left to get there. So I would say that although we have this bearish change signal, possibly pushing prices a bit lower in the next few days or possibly even weeks, we had this bullish extreme. And if you look at the chart, all of these examples suggest that these COT extreme signals in the Mexican peso are pretty reliable signals. Let's move on and have a look at large speculator COT extreme. Here we go. We've got British pound on top of our list, followed by rough rice. We have a 163 report extreme in large speculators. So let's open a 5-year chart right away and see this extreme on a wider time frame. Here we go. You can see large speculators here, basically at 50,000 contracts net long level. This 163 report can be found over here. Back then, this was a bearish extreme. You may see that it did affect prices, although we needed to wait a few weeks back then before prices reacted to the signal. So this is, of course, a bearish COT extreme signal that we can see on the charts right now. And of course, technically speaking, that is not a bad point to enter a short trade. Rough price, our next market, 130 report extreme in large speculators. Opening the 5-year chart. Here we go. We can examine this extreme on a wider time frame. Of course, in case of rough rice, we were talking about a bullish extreme for quite some time, throughout 2012-13. We had this bullish extreme in the market, pushing prices still slowly, steadily a bit higher. We're moving away from that level, but of course we're pretty far from any significant bearish extreme in rough rice. So in my opinion, this is still more of a bullish extreme on the wider time frame. I mean, looking on the long picture, the big picture, we should be expecting the continuation of this rally. Russell 2000, we talked about it. I would say that's all for this week. I'm not going to show you any more charts, but of course, hey, all our COT charts are available here. You can check them out, and if you would like to have a more in-depth and detailed COT analysis, then you may check our service at cotbase.com, and you can check out all the functions that are available to you. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.